Okay, welcome back, people. We're going to take a look at today's price action and we're going to plan for the next few days. Now, I admit it's been a while. It's been a while since I posted a video, but I've been busy living. So, we're back and there's some markets and we've got some potential nice, juicy areas to take a look at. So, let's get straight into it and let's see how are we going to capitalize from these markets? So, as I like to do every single video, I like to just do a recap of the prior setups just to see whether we had anything that actually came into fruition. So, what we said is that as of Wednesday, the 11th of September, my goodness, it's been ages. It's been ages. Wednesday, 11th of September, we had the internal range and that we were playing with, and we said this is our range, and this was this little bit of price action up. And then we said based on this range, price action has a limited amount of things it can do. You know, it can either deviate from the range highs or lows, or react off some sort of internal supply or demand. But in the case that it breaks out of the range, well, we expect a retracement after that break. So if this was the break, we expect a retracement. And I said clearly we'd be looking to enter off of that retracement for that continuation play. And that could take place on on the upside, but it can also take place on the downside. All right, so we're gonna just see, we're gonna play this and see what happened here. So we did have many plays potentially, but the one that actually played out was this continuation play. So we broke out this range, but it wasn't a clear break. We kind of played around here for a bit. You know, we came down, and then we had one attempt at breaking this range high. It wasn't really fruitful. We came back down again. We had another attempt. You know, it wasn't so fruitful. And we came back for a bit more juice, you know, and then we got that break. All right. So we're going to look at the charts now because it's a lot clearer when we take a look at the chart. So I'm going to go down to the 30-minute time frame. And on that 30-minute time frame, we're going to try and find where we were. Where did we say we were? We said it was the 11th of September, wasn't it? Yeah. Cool. So that means the range in question is this one. It's been ages. It's been a long time. All right, but anyways, this is it. So 30th of September, we're around here. We had attempts number one, attempts number two. Okay. So at the moment, would we call this a break? This attempt here? No, this is not a break out of this range. All right. Because if this is our range high at 58, 130, this is not a range. Why? Because we cannot see a close. We haven't claimed that level yet. So we come back down. We have another attempt. Okay. So still not a break so far. So where is this break then? Where does this break take place? Well, we're going to have to look at price action to see how it developed. Let's increase the pace. Let's see if we can go 10. Okay. All right, cool. So now do we have a break? Yes, we have a break. Why? Because now we have this clear bull trend bar that closes above that level. All right. It closes way above that level. So now we have that break. All right. So now what can we look for? The fact we've had that break now, we're looking for that retracement. We realize that our structure on the way up, it looks as follows. It looks like this: high, 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 low, high, 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 low. And we have a little bit of a weird structure here because we actually have, as you can see, I've drawn a high low, a high high, which SFP that level. Then we had a high low here, and then we had the break. Then we had that flush. All right. So in terms of your last expansion leg, this is our last expansion leg. Okay. And if we look on the 45-minute, now, some of you might be thinking, for the eagle eyed amongst you, you might be thinking, all right, but listen, we had a retracement already, but this is a tiny retracement here. Yes, this does look like a retracement. However, if you go on a 45-minute, it's just one straight flush up. All right, so this is not a retracement on the 45-minute. This is why it's so key to look at all your time frames when you're trading. So what does that mean? That means our market structure at the moment looks like this. It looks like high, low, high, low, high, low, high. All right. So we're expecting that retracement now to look to enter that long. Now, that retracement, as we can see, comes quite deep. You know, it comes all the way down, plays around a bit, does play around a bit. Now, if this had come and taken out this high, I would be really careful with that. Why? Because that would suggest that we have flipped market structure bearishly. However, as presently constructed, there is no flip. This is simply a retracement all the way down. And of course, we're looking to enter a trade off of that retracement leg. Now, what did I say off of the back of that video? I'm not sure if I said it on the comments, but I'm pretty sure I would have said it on stream. So if you want to go back, have a look at that video to see. But I said we're going to look in here to see whether we have any remnant demand zones which we can react from, and we do. We have a nice little zone here, nice little demand zone here, which is exactly where we got that reaction from. And let's check what time frame that zone is on, just for clarity. So pop down to the 24-minute. It's not on the 24-minute. Let's pop down. Oh, yeah, there it is. So we've got this zone. It was a 15-minute zone. All right. So we're just going to call this a 15-minute zone, label it accurately, so we know exactly what time frame that happened. So a 15-minute zone. So guess what price came to do? Price came all the way back to that last zone before it got that continuation. All right, and that's why we got a move here. So as you can see, our area of interest would be around here. So if we're looking to enter this trade, we're looking to, potentially start looking for a long at that zone to take that at least to that high. All right, and this was a juicy, very nice trade, this one. All right, so let's see how that transpired. So as we play it down, price comes down to our level. All right, obviously we would have drawn this out in advance, waiting for that level and looking at market structure as price came. So now, if we pause this, let's see what did price do at our level. Well, at our level, let's see what price did. So if we zoom in, let's drop to the 10-minute. Just look at the 10-minute market structure. We can see that our market structure looks like this. As we come down to that level, we get lower low, and then we get that flip. You see that flip we talk about? That shift in market structure that we love to see. You know the motto here, we said no change of structure, no trade. So here we've got the change in structure, so we should be in a trade here. Not only did we get that nice change in structure, I'm sure if we look at market cipher, we got bearish divergence. Yep, we did. See, as price is going down, our momentum is going up. However, the money flow was coming down here, so I wouldn't be surprised if you were a bit hesitant on this based off of market structure. But not market structure, market cipher. But based off of market structure, this was golden trade. So if you entered this, you'd have seen the break here. You'd have waited for that retracement. We got a deep retracement. Yeah, kind of a deep retracement because this is past, the golden pocket, the 65% line. This is almost a 786 level. We can check that. If we let's drop down to the 5-minute and let's just quickly check at what level was that retracement. So if we take that fib pull from the low to the high, and we quickly go on here and get our fib levels up, and we can see that that retracement actually took place, just past the 786 level. All right, which is quite a nice place for a trade, just past 786. So if you're trading this strategy just simply based off of fibs, after a break, if you say to yourself, after a break of structure, I want to enter at a golden pocket, which is a pretty good strategy to use anyways, try that. That would have still been a good trade. Where would you have put your stop loss? Well, you'd have put your entry there. You'd have put your stop loss right there. Okay, and this, oh my gosh, this would have been a nice one. Very, very, very nice one. All right. Now, price, obviously, you may not have done that. You may have said, okay, I'm not going to enter based off a fib. You may have said, I'm going to wait and see if I get a nice order block down here on this expansion leg, and I'm going to enter off of the mitigation of that block. Let's see if we got one. Did we get one? I mean, yes, yes, you definitely did. You definitely did. So yes, we have a nice 2-minute order block here. You may not be able to see it, so definitely pause the video and rewind it, rewatch it, whatever you need to do. But here we see it. We've got a nice 2-minute order block, which is exactly what price came back for. All right, and then we got that move up. Now, how nice was that trade? How nice was that trade? That was a beautiful one. All right. If we were just taking that up to the target of that trade, which would have been obviously that week high, okay, that would have netted you to, oh my goodness, 23x on that one. That's if you took your profit. Probably more, actually. Probably more. Probably more. I think you can probably still be in that trade. Now, obviously, this is kind of just hopeful thinking now, right? Because not many people enter a trade and, watch the trade go up and up and up without getting that urge to take profit. Because usually, as soon as you see yourself in profit, your emotions say, "Oh, let me secure these profits." So if you didn't, if you held that trade all the way up to current price action now, that would have been a nice, let's see, did we get up to 50x? 48x. 48x. That's beautiful. That is beautiful. Now, not many people may have seen that, all right? But hopefully, as you follow this channel, as you follow this stream, you're starting to see these opportunities more and more and more and understand exactly how I enter trades and how I trade using market structure. So 48x, can we just put that in perspective for a second? 48x. Now that means, all right, this is my favorite part. That means if we had risked $100 here, we would have just made $4,800. All right. That's if you had one TP, right? But that's unlikely. But if you had one TP, but let's say you took out 50% there, and then you took out you let the rest ride, or you took out 75% there, and you let the rest ride. But regardless, best case scenario, you would have netted at least 48x. All right. Now, if you're risking $1,000 per trade, in one single trade, you would have just made $48,000. Can you see the power of risk management? All right. And the power of selecting the trades with the highest predictive probability, the trades with the edge, the trades that follow market structure. Nice trade. Very nice trade. All right. So, all right, that's done. That's in the past. No need to lament. All right, so now let's see where are the next trades coming from. Well, as we can see, ever since that trade, we've kind of been in a nice little uptrend there, a nice little cascade. We've had a high, 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 low. All right, we have a nice pull up here, a nice high, high here, and then we have an internal structure arising that we can see here. Okay, so we're going to be looking now to see where the next trade comes from, and that's what we're going to spend the next 8 to 9 minutes talking about. In order to do that, I just want to zoom out for a second and give you a snapshot of what's really going on here. Obviously, we've had this daily level, this last daily high low that's still intact, okay? And we've got this massive range we're playing from that's kind of tending downwards. We've got this, bear trend line, that's sloping down. We've had tap number one. If we just make that nicely there, we've got a trend line that's kind of been respected for a while. So tap number, say 1, 2, 3, 4, at least about 4 taps on that trend line, right? So it makes sense to definitely look up here to see what's going to happen when we get up there. All right. Now, not just that. Um, prior to what's transpired over the last week, we remember, for those of you who are following here religiously, we remember that we had a nice PO3 here, didn't we? We had accumulation here. We had manipulation of retail traders, nice little trap, and then we had the expansion down. And remember last week, I don't know if it was last week, but I definitely said in the video, we may be getting something similar where we're having an inverse PO3. And that's exactly what happened, where we take this as our accumulation slash accumulation, whatever, or range. And then you can see this as your manipulation. And what follows after that? Your bullish expansion, which is what we're seeing so far. So almost the opposite or reverse of what we saw up here. Manipulation, um, um, accumulation, manipulation, expansion, accumulation, manipulation, expansion. All right. So that was quite a nice one. And that's exactly what's transpired. So it's quite interesting. I think it's beautiful when you lay out all the potential trades that could take place and all the potential movements price can do. And it's quite nice when what you saw or what you thought about actually transpired. It's quite a good feeling, even if you're in the trade or not. Even if you're in the trade or not. So it's definitely a good practice. All right, so now if we go and so if we look at the 4 hour, let's see where we are. Let's see where we are. All right. So what am I looking out for? We're going to talk about the bullish scenario. We're going to talk about the bearish scenario. So the bullish scenario is if we're looking for longs. Now, if we're considering this whole bit as our range, can we still be considering longs? All right. Well, we've kind of just passed the equilibrium of our range. All right. If this is a whole entire range and the 50% line is the equilibrium, we're kind of in, lower premium at the moment. So should you really be looking for longs? Definitely not swing longs. You might say you want to long this up to the range high. Yes, it's your money. Do what you want. All right. You might say you want to long it up to the next zones above us or this next trend line. Yes, it's your money. Do what you want. And if that is your strategy, all right, all you need to do is follow this chain. All right. So we obviously have a nice chain here that we can see on the 24-minute. If that's what you wish to do with your hard-earned money, which is to long in premium, then be my guest. All you need to do is go high, 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 low. High, 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 low, high, 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 low, high, high. All right, if this comes a bit further down, you can get into a long there, or you can wait for the next break in structure and get into another long here. So you can definitely catch either one of these. Look for demand zones within the expansion legs in order to do so. But just be careful. Be careful. Why? Because you're approaching range high first. Second, you've got some supply zones above us. And remember, these are obstacles or potential reaction points. Okay, so definitely be careful. Be careful if that's your plan. All right, scenario number 2. Let's look at what the longs, the bulls are thinking. The bulls, what are the bulls thinking? Well, I'm going to watch to see how deep this retracement comes. On the 4 hour, I feel like we're going to run out of time today. I feel like we're going to run out of time, but I'm going to do my best to get through this as quickly as possible. Now, there is one scenario in which I will get into a long. I will get into a long if this is the structure we are following, which is the 4 hour structure where we've got high, 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 low, high, high, low, high, high. If this high, low comes down a bit deeper before it taps this range high, if it comes down to about here, this old demand range, I may flirt with that idea. I may flirt with that idea. I may flirt with taking a decent long here. I may definitely flirt with that idea. But in order to do so, I must make sure, I've got quite nice entry in a lower time frame and my stop loss is quite low. So that will take us a nice 5x. Okay, so I may flirt around with that idea. That's probably the only local long I will look to take. All right. Only local long I'll look to take, but to do that, we'll need to see what price does. All right, next, what are the bulls thinking? Now, it could happen that price actually decides, you know what, we're in this range, and in this range, we've been oscillating up and down, haven't we? We've gone up, we've come down, we've gone up, we've come down, we've gone up. Okay, now before we take out this range high, if price decides, actually, do you know what, I would like to break flip structure, come down for a bit. Okay, now if we do come back down into these levels here, all right, these levels will come back down to test this. Well, that's not the range low anymore. The range low is going to be down here. If we come back down to test this level, there's no reason why I'm not going to wait there and look for a nice little long play to take this all the way back to the range high. Okay? No reason why I would not do that. And in that case, that just means the range is an extended range. Okay? Instead of it breaking here, it's extended. It's still oscillating and doing what it does. So that's another potential bullish scenario that I am thinking of. Now, what else am I looking at as far as the bulls go? Well, as far as the bulls go, I'm watching this supply zone above us because this supply zone is a key area for us to get a flipping structure. Yes, all right, or at least a retracement. At least a retracement, because we could get going into this supply zone, we could get something that looks like this. So price could come up here and then bounce here, give us a nice flipping structure here, and then start coming down. That could happen. Of course, that could happen. And if that happens, all right, I would need to see another flip in structure first before I enter a long. Okay, so what do I mean by that? I would need to see another flip in structure. Let's say this is a bearish leg. I would need to see another flip. There is the flip. Look for that retracement before entering that long. Why? Because I'm basically basing that on the premise that we are breaking out of this range. This is our range. Yeah. We're breaking bullishly out of this range. Yes. Now we are retracing back into the range before we are continuing up. Very, very similar to what happened for our last trade. Very similar to what happened for our last trade. What happened here, I believe. Okay. So I'm looking for a nice little RIMC, range, initiation, mitigation, continuation. Range, initiation, mitigation, continuation. So that's kind of what I'm looking out for my next long idea. Something down here where we break out of the range, okay, and then we retrace and carry on. Now, we've got these two obstacles above us. All right. So if we do come up here, I'm going to be watching closely to make sure that this flipping market structure that takes place here, I need to make sure it's not going to be a continuous flow down. Otherwise, I'm easily going to get stopped out on that one. Okay. And I also need to watch to see if we grab this liquidity over here. Because if we come up here like this, we grab this liquidity up there, i.e. sweep this level. Okay. And then we flip structure. Well, that tells me we could potentially be coming further down. Okay, we could potentially be coming further down. So that's why I think this is, if you're looking for long, this is definitely something, it's an area that you have to pay attention. It's not one of those where you just place a trade and walk away. All right. What about the Bears? What are the Bears thinking? Well, as for the Bears, I'm looking to see what happens at this range high. All right. Now, this is a classic trader's manual. Look for shorts at the range high, look for longs at the range low, and that's what I'm looking for. So we've got potential trade number one, which is a reaction at the range high. Okay. Now I'm also going to be looking for potential plays off of these zones, this daily zone and this 2 hour zone. If we get a flip anywhere, as we discussed earlier, so if price comes up, breaks out from the range, if we get a flip and a retracement, that will give us a nice counter trend model one. So we can enter that. Why not? All right, wait for that retracement, draw that down. All right. Now it could happen that we don't get a flip. All right. What could happen is actually we say, you know what, we're gonna come up here and then we're gonna start ranging for a bit. Price is gonna come up here and say, do you know what? Let me just play around for a bit. Let me set a high point. Then we're gonna come down, and then we're going to try and claim that high again, set a high point. That would be nice. I quite like those. I'll wait for the sweep of the second high, a nice second entry model, and I'm going to play it like that. Okay, so this would be our range in that case. Sorry, my drawing isn't as, it's not as good. I've been away for a while, so I'm not very practiced at the moment. But this would be our range. Yeah, this would be our range low. This would be our range high. This would be our range low. This would be the sweep, and then I'll be looking to enter that trade off of a flipping market structure up here. All right. So that's what we're looking out for. So we're just going to put a nice setup. This is something we want to be aware of when we come up here. All right. And just play that down like that. All right. Now, this is a juicy level. I can't emphasize how juicy this level is. I really can't. Why is this a juicy level? Well, let's take a look. First of all, I just want to quickly see what the volume is saying over this region. Oh, look at that. Look at that. Look at that. All right, why is the juicy level? Okay, let's see how many stars this level gets. Let's see if we can get a star. Here we go. So first star, who knows why that first star is there? That first star is because this is a nice supply zone. We've got a daily supply up there, strong supply, nice supply zone, yeah? All right, second star. Why did we get that second star? Well, the second star is because not only is it a supply zone, it's also a trend line. We get this reaction of this trend line at this zone. Okay, so we're going to be watching out for that. All right, now let's see. Can we get a third star? Yes, there is a third star. Why is there a third star? Look, we've got a value area high of this whole entire range also coming in at that zone. All right, so we've got a value area high coming up there. So we've got 3 stars already, which is really good in terms of giving your zones like what do you call it? I'd probably call it enhancing features. All right, this is definitely an enhancing feature for that zone. All right, now what else? Also, we're in premium. We're in premium of our range. So again, maybe that's a 4 star. Okay, so these are nice little tick points to give you more confidence in a specific zone. So I'm going to be looking for a short there. And in the case that we blast through the 2 hour zone, we blast through the daily zone, and we reclaim this daily zone, i.e., we close above it, we retrace, we backtest it. Well, in that case, man, I think we're going back for these all-time highs. I think we're going back for the 74K, and I'm going to be looking for a short at that level. Okay, in the case we reject from that level, but I'm also going to be looking at the potential of. I think if we break through this, I think if we start closing above this all-time, I think it's going to be rapid. I can see us getting to 80K, 85K quite quickly if that happens. All right. But in that case, we're going to be looking for a range break and look to enter on that continuation and then take that further up as we do here 5 days a week, sometimes not 5 because um, because life happens. But anyways, that's what I'm looking out for. That's in terms of high probability trades. That's kind of what I'm looking out for. I'm watching that key zone. And yeah, that's it. That's it. That's it. There are other things. There are always other things you can be looking at. There are always other setups. So I'm going to analyze this a bit more, and I'm going to give you a few more setups on the picture. So stay tuned. Have a look at the video. Have a look at the picture. And yeah, if you found this information useful, don't forget to follow to stay, up to date with what's going on. And hopefully we get a nice move today, or over the weekend, or next week. I'll see you guys. See you guys on Monday.